Whoa, all right, y'all. Welcome to another video. We're jumping straight into it. We are 10 minutes post New York Open, and we will get right into it in just a minute. I was checking out the high time frames. We are still on this bullish 1 hour bias. There's no break of structures to the downside or anything yet, even though the overall, this could just be a crazy run, unless something happens. So could be filling all these iniquities. But we are going to talk about a trade that I took yesterday that ended up being a good one. So we talked about I'm going to take this off. I know it looks messy. I have the lines. Somebody commented on it already. The lines and everything are meant to show all of my structures, and the blue ones are for time frames because this is 8 a.m. New York pre-market. This is the beginning of Asia session, beginning of London, beginning of New York. So that's what's going on there. I made them a little smaller, so hopefully they're not too bad on the eye. However, let's take a look at what happened yesterday. Unfortunately, let's take a look. I'm going to do this. So, look, I don't actually take the trade. So this was the failing trade somewhere in here. I don't actually take the trade, the one that we lost back here, this terrible trade. I should have, right? I should practice buying into the trade, but with these paper trading account, until I open a demo account, the money's like $100,000. The 1% makes no sense. So I have to do math to mimic if I only had $100, but then it can leverage as much as it wants. And so it's not the same. So I'll open demo soon. I'll work on that the next time I have free time. So really what I do is once I set my position, this is basically the trade for me, and it's helping me set the position and then walk away. Because what I want to be able to do, if you set your stop losses and you set your take profits, like you should, in theory, just be able to walk away. Like I don't need to watch it, and unless I wanted to, take break evens. And I'm sure if I'm in trades and I'm sitting there and like really doing this in the future, I will be watching the entire trades. But this is practicing letting go of my emotions, setting the trade up, looking for the entry, and then walking away from it. So what did we do yesterday? So yesterday, this is London session on GU, and New York swept the London lows. New York swept the London lows on every time frame right here. 1 hour liquidity sweep, 30-minute, 15-minute. It all became a liquidity sweep because we were in this filling this imbalance from the day before where we lost this trade because I took it too early. Should have been like on this part or just been in this whole thing if I would have saw this at 9 in the morning, but I didn't do that. So that was a good learning lesson as well. So we're going to go through this, and then I have my journal right here as I'm journaling the trades, which hopefully you guys can read this stuff. I'm not sure. I hope that looks all right. So we will get into this later. So what I saw and how this happens. We had the liquidity sweep on all of the higher time frames that we wanted to see. I wonder, you could even say it looks better on these time frames. So let's get down into the 5-minute where we made the entry and the trade. So we're looking at this liquidity sweep. We know from studying TJR's bootcamp and from the Forex strategy that he uses as well, back in the day that he posted about the lows and the highs. Like you mark out the highs, mark out the lows, and whichever one gets respected, it's probably going back up at least to the highs. So I took this as a high confluence liquidity sweep here, the low being respected, and then breaking structure here on the 30-minute. Let me get back to it. So that's the thing that I learned, right? So if we go back here, and I want to be quick about this. I didn't see much today, but we'll get talking about today. From the losing trade, what happened is I didn't look for, getting caught up in lower time frames, paying more attention to the bigger picture. And basically, I did not wait for the break of structure to happen on the 30-minute and the 15-minute. I just looked at it on the 5-minute, and look, it was a little baby retracement, and I got smoked. So I waited for the break of structure on the higher time frame, confirmed that it was happening on the 15-minute as well. I wonder, sorry, I'm OCD. So yeah, it happened up here on the 1 hour after this close. So you could have been a part of this move, but that's too high of a time frame. So we got one here. We got it here. And then we were looking for our pinpoint entry on the 5-minute. So liquidity sweep, break of structure. There was a doji here, which I was concerned about, but not really. Once this opened, I was prepared to go. I mean, we have the break of structure. We have the London low going. And honestly, there's not many confluences like the order blocks, or not that I picked out for this. So really, I just went off London low, liquidity sweep, break of structure, and it was right. So let's see if there's anything else that I could have used right quick. This created a fair value gap, which got retraced into. So you could have waited for the retracement and then gotten confirmation. That could have been better. And then started here at this open. Would have actually been a little bit of a better, like you would have gotten in on this, on one of these closures once it closed bullish, or this one when it broke structure again from the retracement. However, I picked this one because I figured if it was already doing this, it was going to happen. There would have been a retrace, and we would have been good to go. So then what I saw is the London highs. So I figured, okay, it's going to come back up to London highs. So that would have been technically first take profit, which wouldn't have been much risk to reward. Oh, shit. And I put this below the break of structure a little bit, which it could have been like, if you're doing like 10 pips, whatever to increase the risk reward. But I just wanted to make sure this whole thing was a 2-to-1 risk to reward. First take profit would have been half as much. Probably wouldn't even call these take profits. So depending on the risk to reward, I'm still working on that. However, we're going to London highs. We are going to far back high time frame liquidity. So I did 50. I wanted to say like 50% above this, above the London highs. And then there was this resting liquidity up here from this old news imbalance. And we got all the way up there. So, yeah, that's how I decided that. And it ended up working. We're still in the bullish break of structure on all of the time frames, and it ended up being a working trade. So I did talk about this in a short yesterday, which probably made a little bit more sense in my brain since I was actually talking about it. And yeah, realizing that there weren't many other confluence besides break of structure, liquidity sweep, and London lows. So that's what I did. That's what worked. That's what happened for me. And still, though, yeah, not seeing much else. I mean, you have this move down that caused this. If you wanted to call this a retrace into an order block, wonder if there's like any equilibrium on this. Probably not. Not really for bullish. So kind of just went with the bullish bias after seeing all of these movements, after seeing the 1 hour and the 4 hour stay bullish, after filling this imbalance. So, I mean, after this break of structure, it hasn't been back to bullish yet, or bearish, sorry. So, would say that we're back into bear or bullish bias. I mean, we're sweeping all of these liquidities, making up for all of this imbalance after this giant liquidity sweep. So, and news coming. I mean, yeah, I thought it was just going to be lower lows. Filled the imbalance here, and it's just continuing to go. Because the U.S. is probably not doing very good right now. But the stock market is back, kinda. That's Friday. It's kinda getting back. NASDAQ looks worse. Looks exactly the same, actually. That's going down. This is going down. So, yeah, that was the winning trade yesterday. I will get more used to actually clicking buy and sell. However, this is my practice for believing in my positions and believing in what I think is going to happen and then reviewing it. So that's what we're doing today. I'm about to head to the gym, get everything up. We will I didn't really look much at what's going on here. What is this guy? Did I do that? Oh yeah. This would have been break of structure to the downside if it was on the 1 hour. But this candle hasn't closed. So that's all that I marked out today. Let's actually do a little bit. Let's just do a little bit of today. Let's get low. So let's see. London, it didn't get all the way to Asia lows, but it did get some of it back. So interesting how you could have played off that, unless, I mean, those candles and wicks aren't even close. So did hit Asia highs though, and it's not coming back down, and it didn't get back down. Like, it didn't come back to the lows again, or the London lows. New York is starting about here. Got back up to the liquidity swept. Oh shit, hold on. This could be developing. Let's see. Let's just do this quick. Go off these two. So a lot of bullish pressure, however, closed bearish. So liquidity swept London highs in pre-market. Now we have break of structure would have to be. All right, I'm done with this. Hold on. Break of structure would have to be around. I mean, this is all just chopping. Break of structure would have to be down here. So if this candle closes, it almost got there, but it has 5 minutes left. Can we see that on any of these? Yeah, this one, this doji. 1 hour would have to be. Oh shit. Well, that's a curious question. With these candles coming down, does this still count as the low? The low would be here, actually. This counts as the low, because it's probably shown on the third. Yeah. So that's the difference between this candle on the 30-minute and this one. It's still being a low. So 1 hour break of structure would have to be here. If we get that 1 hour break of structure, that would be interesting to see what happens, unless there's building blocks that I'm not seeing that haven't already been hit. That fair value, like this itty bitty thing, is not anything. What about on the 4 hour? I mean, these are just 4 hour retrace. Couldn't even tell you. Nothing on this side to go. No fair value gap or anything. There's one here. Got tapped. Nothing here. Nothing there. This little one got tapped. Nothing here. All right. Couldn't tell you, actually, today. We're going to have to see how this plays out and learn the market experience from what's going on today. Because I don't know. Truly, plain and simple. Don't know. But this looks like a liquidity sweep. However, there's a break of structure here on the 5-minute. But we don't believe in low time frame break of structures unless it's for entry anymore. So, very interesting. We will see what happens with that tomorrow or throughout the day if I'm watching it. But right now, I'm not. So I appreciate you guys very much for watching. I hope you enjoy the journey of learning and you can learn along with me and learning what I'm doing. But, you know, it's not advice. I'm here for suggestions. I'm here to learn. I'm just showing off what I'm doing. And if anybody's watching and this is right and wrong, or if it's terrible, then I'm open to suggestions. So using the internet to be my friend and really help me out if anybody cares to watch this far. So I appreciate you guys very much, and I'll see you later today. I have a big post coming out. So 300 sub specials coming out if you watch that, and we're grinding. So appreciate everybody that has subscribed to the channel and has supported, and I will continue to post videos. Thank you very much. Peace out.